All right, good morning, everyone. We're going to get going. Okay, obviously S&P markets took an absolute waxing last night, down about down 2.5%, right on the nose, over 40 points. Really the biggest sell-off we've seen in I think about a year on that index. Really marks something specific. There's a hell of a lot that has happened and that's gone into that. Obviously, it was mostly caused by Bernanke, but I think also, the Chinese numbers that were out yesterday, sorry, not yesterday, the day before, overnight, were really weak, and they also, they're actually talking more hawkish in terms of what they're going to do on the monetary side. That a lot of hawkish speech and I think that really is a big part of what puts such a damper on the entire commodity basket. I mean, obviously, a lot of that was driven by Bernanke as well, but I don't think it was that only by itself. So I think it's important to realize that was also a factor. We saw all 10 sectors in the S&P down over 1.5% yesterday, which is really important. There was really nothing spared. I think the one thing that's important is that, just listening to some of the guys, some of the traders on the floor talk last night on the NYSE, they're talking about it was actually quite an orderly sell-off, even though everything was down across the board. People just looking to, take some risk off the table. There was no panic selling really going on. So I think that's really important to notice. And it's also important to remember that we are only 5% off all-time highs in the S&P. So it's not like the world's ending here, even though it kind of felt like that a little bit watching the market just get, wiped out last night. Bloomberg also reported that U.S. regulators are considering doubling a minimum capital requirement for the largest banks to strengthen liquidity. That's really got to be bearish for U.S. banks. I mean, 5 out of 6 of the lenders wouldn't make it. I think Wells Fargo is the only one that would meet that standard. So that's a really important turn of events as well for the U.S. banks there. And that is a little bit of a negative overhang, I think, just to the market in general. Japanese market managed to see green overnight. The yen didn't waver throughout this entire thing, and that's one of the reasons why I think you've got to feel as though this thing is not. It's not all terrible. We've been needing a correction in the U.S. markets to be healthy, and I think that risk-on indicator has kind of hung on in there really well. So that's important to remember. Obviously, some of it is dollar strength, but still impressive that it's held there. The rest of Asia was, actually not so bad. Between Hong Kong and Australia, I mean, they actually hung in there somewhat reasonably well after last night's action. So I think a reasonable result out of Asia. We'll have to wait and see what happens today. The S&P is obviously up about 10 points on the future right now, but after big sell-off days like that, we almost always come back and at least test the downside. So it's going to be really important to watch this action, what goes on there. And the Shibor tumbled there for record highs as well in Asia after the central bank injected funds to alleviate a liquidity crunch. You can see there it went from 12.85% to 8.43%. So, I mean, that's an incredible move. There's some big volatility going on there, and I think that's something we're going to have to continue to monitor going forward. All right, we've got a few stocks going ex-div on Monday. That's Clicks, Vodacom, and Tiger Brands. Some quite big divvies there, obviously, especially out of Vodacom. Vodacom obviously has just kind of been turned into a non-event of a stock over the past probably 3 or 4 weeks. So, if you're looking to divvy strip this thing, I don't know that there's necessarily a whole lot of movement coming on the upside. And then the key data out today, there's really nothing today. I think there's a finance meeting in Brussels, and that's it. So there's really just nothing on the cards of importance today in terms of data. So we're just going to be sitting there playing the action. That's pretty much the game today. All right, let's jump into the maps real quick. Let's spread this out just a little bit. Yeah. All right. All right. The first thing I wanted to show is the S&P. All right. We talked about this yesterday, and how we kind of, if you take if you looked at the line, the trend line support, I mean, we were coming back and we were testing. It's amazing how perfectly every time we touched trend line here, oh, that one didn't quite touch, but touched it again there, touched here, touched here. Yesterday was the first time we've broken through the trend line since November of last year, of the trend that's been established since November of last year. It's a hell of a long time. So I think that's really important. What's also important is, we talked about this one before, is that we drop support at this key level here, which is, let me just take it up just a touch, at 1598. We've talked about this a couple times. We wicked down on it twice to touch it, but couldn't break through it. Now we've actually broken that 1598 support, so I think today is kind of the moment of truth. Obviously, futures are kind of trading, S&P futures are trading up close to that right now at the moment, but not there yet. All right, FTSE. Let's have a look at the FTSE. I'll actually jump this back to a 2-year. Same sort of thing here. I mean, so the FTSE, you can see, is still above its recent trend line there, but what's interesting here is the kind of head and shoulder chart that we've come into on support there. Really does look a little bit head and shoulderish. The right shoulder isn't very well developed on this chart, but you can see here kind of left shoulder, right shoulder, head up here, obviously. And we've broken down from this pattern. I mean, there could be significant downside here on the FTSE. That we dropped that level at 62.33. The next level of support I would see, I mean, is probably down here somewhere, which is a hell of a long ways away, and that would be about the distance of the height of this pattern. So we may be able to come down 300 odd points on the FTSE over the next few sessions. So just watch that and keep that in mind. This thing's got a ways to fall, I think, potentially before we hit any type of support, unless it can regain those levels up here around 62.20, or sorry, 62.30 over the next session or two. All right. Let's look at Anglos. We haven't really been looking at this one a lot lately. It's been so sideways and so choppy in here, but this pattern actually has kind of lent itself to a little bit of maybe a kind of almost a head and shoulder setup as well. I mean, it's obviously very, very rough, but we've seen this pattern a lot recently. This one's just been a little bit more choppy, I think, specifically because of the rand. But we literally closed right on what I would call support, and the reason why I say that is because here's the close. This green bar, obviously we dropped below here about 6 or 7 sessions ago, but we didn't get a close below here. So we did make a new closing low. If you look horizontally, we made a new closing low only marginally on yesterday's session, and then obviously we were literally right at support. So I think if we break down to the downside out of this little pattern here, I really think that could be potentially all she wrote here for Anglo. So watch this one closely today. I really wouldn't be surprised to see this thing trade down today again. All right. Naspers. Naspers, obviously rough action there yesterday. The thing was above 740 pretty much the entire day until the last hour and a bit, and it literally bombed out for about $25. But right on trendline support here. If you look at the past, going all the way back from April, obviously this thing's getting quite vertical, but I think this level, it is somewhat important. If it drops that today, I fully expect it. I fully expect this to come down and test at least closing levels here at 700, which has really kind of made itself a level. Right here around 700. If we drop, like I said, if we drop this level, a closing level on Naspers today, I fully expect us to test 700. 700 might be worth a nibble. If I'm not mistaken, they've got earnings that are out the beginning of next week. So it could be some sort of play on there. All right, Impalas has, let's just bring this forward a little bit. Obviously, this has been a nasty sell-off for Impalas. But in terms of horizontal support, basically we made a new closing low yesterday on Impalas at 94.80. The previous closing low, I believe, was at, let's just have a quick look. Previous closing low was at 95.90. So we did make a new closing low there in Impalas. This isn't a real high. It hasn't made a big pullback from the height of this little channel here, but still potentially looking at another 10, $11, which is 10% on that stock, over 10%. So I think if we can hold below 95 this morning, this thing I think could see downside potentially to 85. So watch that one closely. And Impalas. Let's have a look at Exaro. We talked about this one yesterday. We talked about the head and shoulder formation yesterday, and I unfortunately didn't sell the freaking thing at 41 when it broke below 41. But you can see here quite clearly defined neckline that we broke here around 41 in Impalas, in Exaro, and then we came down and we closed right at previous closing lows as well. I mean, literally right on the number at $137. So this is to me this is a great setup here because it's so clearly defined. Because we see how clearly defined the previous lows were. We closed right at the lows. I mean, we trade lower this morning below 137 and can hold there for just a little bit. I actually think it's a brilliant short because the height of this pattern could really take us quite steeply to the downside here in Exaro. So keep an eye on this one. I really think that this thing could get a little bit messy if we can drop 137 on a closing basis today. And the last thing I'm going to show is actually it's Old Mutual on the LSE. We're going back to one of our local ones to show an offshore chart, but we've really come down to be right at support here. I mean, I've drawn it there because I don't think we really broke out until I think even though we got a touch above this level a couple times on throughout September, October of last year, I wasn't able to kind of get above that level. We also fought that level again here. To me, this is the level. It's at around 177, which is right where we closed in mutuals. And I think that this thing could really lend some support today. The last level that I would look at on it is literally just a touch lower, and this is also pretty clearly defined. It's at about 165. Call it 166. But this little risk range here, I think, is brilliant to be able to get in on Old Mutual, where we've had a nice steep pullback. And what's been one of the more solid stocks on the board for a long time. And that's it for today, guys. Thanks a lot.